Hello and welcome to the Professional Home Buyer Seller series of videos. I'm Pete Boer, and with my business partner Beth Campbell, we are the Community Realty Group. To view additional videos in this series, simply go to our website at www.thecommunityrealtygroup. We hope you enjoy the show.
I'm here with Matt Burke of SunTrust Mortgage, and with over 8 years in the mortgage industry, Matt has the understanding and expertise to help you as a first-time home buyer, a refinance, or move-up buyer get into the home of your dreams. Matt's got a solid understanding of the real estate market here in our area, and with his guidance and expertise, your closing should be just as smooth as it can be. I'm here with Matt Burke of SunTrust Mortgage, and we're going to go over some common lender questions. Matt, thanks for being here again, and I'd like to ask you, what are the different types of lenders that a buyer can encounter, and what's the difference in those lenders?
Beth, there are typically three types of mortgage lenders. There are direct lenders, mortgage brokers, and mortgage correspondent lenders. To start with, a direct lender would be like a SunTrust Mortgage, where essentially we fund those loans as the bank. We close those loans in our own name. We underwrite those loans and approve them, and then we also service the loans. So you basically get a front to back end process or closing of that loan. Then there are mortgage brokers. Mortgage brokers are more independent. They tend to arrange financing or mortgages for individuals. They do not close, a broker typically does not close that loan or fund that loan in their name. They just facilitate the relationship with the end lender for a fee. Then a correspondent lender is really a mix between a direct lender and a mortgage broker. Correspondent lenders are typically smaller banks who might not be able to fund their own loans like a SunTrust. But what they'll do is they'll set up relationships with different larger lenders. They will underwrite, the correspondent lender will underwrite those loans and close the loans in their name, and then immediately sell those loans to the end lender.
Well, a lot of times when searching for a home on the internet, you come across a lender, Apply Now. Is it safe to do that? Should somebody apply for their mortgage on the internet, or?
Well, there are some reputable mortgage companies that are over the internet, but you know what I recommend when you're applying online over the internet, you don't have a relationship with that person, and most of those lenders are not local. You're going to be dealing with somebody in another state who might not have a handle on your local area, and in my opinion, I would want to be with somebody local that you can sit in front of them and see who you're dealing with. That's my opinion.
Well, I know as a realtor, I like knowing that the lender is right here, knows our local market,
right,
and builds that relationship, because I know that you'll do everything you can for me because you know me, versus some guy on the internet that I've never met.
And a lot of internet shops have a reputation for not having very good service because they really don't have the incentive to have great service.
There's no personal reason to have it. As a buyer, what is the lender going to expect from that buyer?
Well, I'll take you kind of into the loan process of what we are going to require of a buyer. These days, as mortgage rules have tightened up, we are actually back to qualifying buyers, and we are going to get a lot of documentation from them. The main aspects of qualifying for a loan, what's going to happen is I'm going to take a loan application, I'm going to interview this person, I'm going to go over their income, I'm going to go over their assets, I'm going to go over their job history, their job stability. I'm going to pull a credit report and see what their credit history is. All those things go into qualifying a buyer. And once I determine that person could qualify for a loan based on what they have told me, then I'm going to request certain documentation, W-2s, pay stubs to verify income, bank statements to verify assets, along with that credit report. At that point, the loan, once I get all that documentation in, the loan goes through some other processing aspects and then eventually is reviewed by an underwriter who makes sure that borrower meets the guidelines and the criteria for that particular loan.
Matt, what should the buyer expect from the lender?
And you know, a buyer should really expect good service from their lender. Timely phone calls, be open with information, because a lot of people aren't familiar with the process and are quite nervous about buying a home. And a big complaint about lenders and loan officers in particular is not giving enough information of what truly is going on behind the scenes. So that goes into the service aspect, absolutely.
Matt, last question. What is the difference between a pre-approval letter and an approval letter?
Well, it's kind of a running joke in the mortgage industry where the pre-approval letter is not worth the paper that it's on. Pre-approval letter is good as the loan officer that wrote that letter. But essentially a pre-approval letter means that buyer has reached out to a lender, that lender has pulled credit, that lender has got a verbal verification of the income from that buyer. So we haven't verified it on paper, but we verified verbal verification of income. And based on the credit report and based on the information the buyer has given us at that time, based on that information, they would be approved in the future. So it's called a pre-approval. The true approval, though, is after the pre-approval process. We get in all the income documentation to verify their income. We verify their assets. We verify their job history. We verify their residency history. Once we verify all that on paper, then that loan goes to an underwriter who then officially approves that loan.
Does that final approval come days before closing, or is it within a certain time frame of going binding on a contract?
Well, it depends from lender to lender, and it also depends within the lender, honestly, how much volume is going on at the time.
Mm-hmm.
Sometimes it honestly takes loans longer to be underwritten depending on the situation within that particular lender at that time. You know, I'd love to say that all lenders underwrite loans immediately after they get in the documentation, but it just doesn't happen that fast because it's kind of an assembly line of you've got multiple files that processors and underwriters are working on, and they have to work through those. And if volume is higher at other times, it might take a little longer.
Mm-hmm.
So there's really not a set amount of time. It should be up to the loan officer to set expectations to the buyer based on what's going on at that time within that company.
And if the realtor with that offer put a financing contingency attached to the offer, then certainly you would try to get that approval within those time frames.
Absolutely, and that's the loan officer's job to communicate with the real estate agent. Hey, there's a financing contingency, and that way I as a loan officer can make sure that my staff is approving that loan in a timely manner to get it done before financing contingency.
Right, because ultimately it's our job as the buyer's rep and your job as their lender to protect their interests.
Absolutely.
Awesome. Thank you, Matt.
You're welcome.
Thank you for watching this video segment on lenders. And as always, please go to our website at thecommunityrealtygroup.com and look at our series that we have on there. It has everything you need to know about buying or selling a house.